if you guys are on the fence between My Funded Futures and Apex, I got you covered because in this video, I'm going to be breaking down the differences between both of these prop firms. Now, before I get started, I can already hear you guys in the comments calling Apex a scam and, whatever else you have your feelings about Apex. I just want to say before the video starts, I am laying out the facts of Apex, right? I don't care about how you feel and your opinion about Apex. The facts of the matter are they did what they did, and now they have clear-cut rules that we can define and follow. So if Apex is right for you, then go with Apex. If it's not right with you, then don't go with Apex. What I will say is that Apex had the right to not pay people out according to their rules and what we all signed in our PA agreements. And they didn't take that route. Instead, they didn't even reset people's accounts. They just said trade 10 more days, follow our new rules or our same rules, whatever you want to call it, and you can get to payout, right? And if you don't like the rules, the DCA rules specifically, then just don't trade with us, right? And so, I just want to make that clear and upfront right now because I already know people in the comments are going to be going crazy about Apex. But at the end of the day, we got to deal with the cards that we were dealt and, just trade, right? I mean, at the end of the day, that's all that we can control. We can't control what these prop firms do. And the best thing that we can do is continue to just try to beat the prop firms at their own game. So with that out of the way, let's get straight into the video. The first thing we're going to talk about are the different accounts and the different sizes that you can get on both My Funded Futures and Apex, as well as what the cost is looking like for both of these two prop firms. And I'm going to be starting here with Apex. So you can get 6 different account sizes with Apex. And if we go over to their website, you can see all the different account sizes here. They got a 25K, 50K, 75K, 100K, 150K, 250K, 300K, and then they actually have an extra bonus account that's a 100K static account that works a little bit differently than their full size accounts. Now the big difference between the static and the full is just the trailing threshold is a lot different. So they don't have a trailing threshold, they just have a total drawdown amount, and it doesn't follow you the same way. It's not an intraday trailing drawdown. It's just a total drawdown. It's more like a real account, but it's a little bit harder because the total drawdown is a lot less. They only give you $625, and then your profit target is $2,000. So I'm not going to focus too much on the 100K static account because I don't know too many people who actually trade the 100K static account. For most people, they're going to be using the fulls, which is why I only used the 6 different types of accounts. But I'm going to go ahead and break down just the 50K account, and you can do your own research for the rest of them, but 50K is probably the most popular out of all of them. However, they are doing a sale right now on, I believe, the 150, the 250, and the 300K accounts. I believe they're like $40 for the month if you do decide to get those. But for the 50K account, the contracts, you get 10 minis or 100 micros. Your profit goal is 3K. Your trailing threshold is going to be 2,500, which again, that's your intraday trailing drawdown. If you don't know about intraday trailing drawdown and the other one, which is end of day trailing drawdown, I have a whole video on that. You can look it up in the cards right now. And you can watch that video after you're done with this one, so you can understand the difference between the two drawdowns. But then they don't have a daily drawdown, no scaling plan, and then you get the Ninja license, and real-time data is also included in that. Now, like I said, you have to worry about the intraday trailing drawdown. Now, your activation fee depends on the size of your account. So each account has a different activation fee, and on top of that, they also have a difference between the monthly and the lifetime, because you can pay a cheaper amount but pay it every month, or you can pay a one-time lifetime fee as well. So I'll go ahead and break that down right now. Okay, so depending on whether you get the Rhythmic account or the Tradeovate accounts is going to determine like how much you actually end up paying for the activation fees. So for the lifetime, this is going to be what you're paying for a lifetime. On the Rhythmic side, it's going to be a little bit cheaper than what you're paying for on the Tradeovate side. So it's like $130 for the 25K, 140 for the 50, 180 for 75, 220 for the 100K, and that's for the full and the static. 260 for the 150Ks. It's 300 for the 250 and 340 for the 300K account. So it is going to add up, especially if you're getting multiple accounts. You got to pay this each and every single time that you're going to go and activate an account. But if you want to choose the monthly option, then it's going to be just $85 a month for Rhythmic. And once you choose monthly or lifetime, you can't change it later on. So you really need to make sure that whichever one you're going to choose is the one that you truly want. For me personally, I just chose the lifetime because it's just easier. I don't have to worry about it. If you hold the account for, more than 2 months, then it's pretty much worth it. It pays for itself. The monthly fee for Tradeovate is $105. And then these are all of the lifetime fees for the Tradeovate side. So 150 for 25, 160 for 50, 200 for the 75K, 240 for 100K, 280 for 150K, 320 for the 250K, and then 360 for the 300K account. So you can see the price jumps up a little bit for the Tradeovate fees for the monthly, but in my opinion, it's pretty worth it. The reset fee is the same across the board for all accounts. I think right now they're running a special is like $65, but normally I believe it's like $85 to reset the account. So if you do end up blowing your eval account, and this is for eval accounts only, not for the funded account. If you blow your funded accounts, there are absolutely no resets. But if you blow an eval account, then you can reset it for the $65 right now, $85 normally, or you could just wait until the rebill cycle, and once it rebills, you'll get a reset with the rebill. They also have a 20 funded account max, so you can have 20 funded accounts all at the same time, and you can copy trade all those funded accounts at the same time. And the biggest perk to Apex is that the accounts are going to be much cheaper, actually probably the cheapest for all prop firms. They run sales like crazy. Right now, they're running an 80% off sale on all their accounts, not to mention the fact that, like I said earlier, their 150K to 300Ks are only $40 right now, so they're extra super cheap. But they're always running sales. The lowest sale that they have is 71%, and the highest sale that they have is 90%. So, I mean, you can catch them on any three of these deals and be paying pretty cheap. Now, the only difference between the three sales is that for the 90% sale, it's only for the first month. And then after the first month, it goes to 80%. But for the 80% and 71% sales, those are lifetime for the account. So you just got to kind of read the fine print when you're signing up for them. But historically, from what I've seen from Apex, this is what they do when they're doing their specials on their accounts. My Funded Futures gives you 3 different size accounts for the eval portion, as well as, when you get funded. But they also have like 2 different types of accounts within that. So technically you really get the choice between 6 different accounts. But the sizes stay the same, but the profit goals and the amount of money that you get for drawdown changes depending on what type of account that you have. So if that was a little bit confusing, what I mean by that is they have a starter account and then they have an expert account. So you can either get a 50K, 100K, or 150K account with them. And those are the only 3 accounts that they have. But they have the starter and expert, and the expert account, it comes with a little bit more perks, but it's also a little bit more expensive, right? So for the starter account, it's going to be $100 per month. And then the expert account, it's $132 per month. And right now they're running a 20% off special, which is kind of standard for them. I think like 30% is the most I've ever seen by them. So the difference now is the fact that the profit target changes between the 2 of them. So for the 50K, the profit target is a $3,000 profit target compared to the profit target on the expert account is 4K. Everything else pretty much stays the same: max position size, daily loss limit, The trailing drawdown is an end-of-day trailing drawdown. So again, if you don't know what that means, I have a whole video on it. And then the activation fee is the big thing. So the activation fee stays the same for every single one of their accounts. It's $150 $150 across the board, regardless for the starters. If I go to the 100K, you'll see the same thing. The activation fee is $149. Same thing for the for the 150K. But the big difference is the activation fee on the expert accounts is none. So right now, with their current sale on the 150K, if that's the account that you want to go for, it's actually cheaper in the long run if you can pass the expert account to pay for the expert account. Yes, you have to make a little bit more money, about $3,000 more, and it's $4,500 max trailing drawdown, but you don't have to pay the activation fee, right? So if you were to get it funded, then you're only paying $300, whereas if you get the starter funded, you end up paying, $450. So it ends up saving you money in the long run. Same thing with the starter. Like even with the starter account, it's $200 a month. You're only paying $12 extra, and there's no activation fee. So you end up saving money. And then, I mean, even here, right? Like you still save the money when you're not paying for the activation fee. You just got to make sure that you're going to pass it on your first try. So if you don't think you're passing the first try, then maybe it might be better to just go ahead and get the starter account instead. And then the reset fee depends on the type of account that you get, because the starter accounts are all going to be the same reset fee. So it's going to be $100 across the board to reset the starter accounts. But the reset fee for the expert account changes depending on what account you have. So it's like $375 to reset the expert account compared to $265 to reset the 100K expert account. And then it's $165 to reset the expert account for the 50K, right? So it is a little bit more expensive on the reset side. But again, you could also just wait till the end of the month and it'll reset everything at the end of the month. And then you don't have to pay the reset fee. You just got to wait till the rebill cycle ends up hitting. On my funded futures, you can have a max of 10 funded accounts at a time. So 10 less than Apex. And then the accounts on my funded future are more expensive, as we just talked about. However, when you take into account the not having to pay the activation fees on the expert accounts, they kind of end up balancing themselves out, right? Like the activation fee is kind of the hidden cost that people don't really take into account when they're trading the evals, because you're so focused on passing the evals that you kind of forget, like, oh, I got to pay to activate this. So at the end of the day, their accounts up front are a little bit more expensive, but if you pass the account, it really turns out to be about the same. But it feels like it's a little bit cheaper on Apex, right? With the fact that you get the deals and the 80% off or 90% off. But at the end of the day, they actually end up being fairly close to each other when it comes to the overall cost of the accounts for the eval and the funded, right? So, I'm here to just compare them, but make sure you do your due diligence and, do your own research and check these things out for yourself. But yeah, they are a bit more expensive up front. All right, so next we got to talk about the eval rules. And again, they're pretty similar, right? So Apex runs a one-day pass special. They've been doing a one-day pass special for like this entire year. I don't think they've changed it. They used to be 7 days, and now it's 1 day. So you can pass literally in 1 day and hit your profit goal and move on to your funded. And their only other rule is just don't hit that max intraday trailing drawdown. That changes per account, obviously, but just don't hit it and you're good to go. And my funded futures, same exact thing. 1 day pass, but it's all the time. No minimum days, no maximum days, just 1 day pass and you're good to go. And don't hit your max end of day trailing drawdown. Same thing, just different type of drawdown. So that's the eval rules. Pretty cut and dry, very simple. They don't make it difficult, but the rules change up drastically once you get to the actual funded accounts. So your funded rules, Apex has a 30% consistency rule, meaning that your best day can't be 30% of your total profits, right? So you can't have a really, really, really large day, let's say like a 15K day, and then turn around and only have like $100 days after that, and then you're gonna get a payout. because you're not. You have to be very, very consistent over there because it's a very low consistency rule, right? So my best advice for the consistency rule is just try to average the same amount every single day, right? Try to average, 200, 300, 400, whatever that amount is. Try to be consistent with your profits. Another rule that they just started to really crack down on is their DCA rule. If you don't know what DCAing is, it's dollar cost averaging. So basically what it means is if you enter into a trade at, let's say, $50 and the trade starts going against you, and then you enter again at, let's say, $45 as a second position, and then the trade continues to go against you, you enter at $40, and then the trade starts to move up in your favor, and then you get out at $60, right, for profit. You cannot do that in Apex. That's dollar cost averaging. They say you can do it one time per trade. However, to be honest with you, just so that you don't have to worry about the rule at all, I just would not DCA, right? Just stick with your bias, have a proper stop loss, have a proper take take profit, and you won't have to worry about the DCA rule. Now, if DCAing is your strategy, then Apex is probably not right for you, and you should probably not use Apex. You could always use their eval accounts just for practice because they're super cheap. But if you think you're going to break the DCA rule, then just don't trade with Apex. Now, they also have the no contract flipping rule, which basically means that, let's say you're almost a payout, you're like 6 days into trading, and you've already made enough money to get a payout. Well, you then can't start just buying micros and getting out for days. It can't be 20% of your total profits. So if you're flipping contracts and that flipping ends up bringing your total down, then you could really screw yourself. So again, just trade. Like on Apex, you just got to trade, and you got to trade with a directional bias, right? Meaning, like, if you think the market's going up, then you got to trade up, and you got to accept whatever stop loss or take profit that you have. And then the last thing that they have a rule on is trading news. So their news rule is a bit vague, which is why I would just say don't trade the news, right? Because the problem with trading the news is that if you trade a news event and you kill it, you could fall into this consistency rule here where you make too much money and then you can't get a payout because you've made too much. Or you could fall into their just trading news rule in general because you were quote unquote gambling the news, even though that could be really a part of your system. So I think it's better just to avoid news if you're going to trade with Apex at all costs. That way there's no way for them to find a way not to pay you out. My funded futures rules are actually pretty similar to Apex's rules. So they have a 40% consistency rule, which is a bit better than the 30% consistency rule that Apex has. But it's literally the same exact thing. You just can't have your best day be more than 40% of your profits. Now, they also have a scaling plan as well. So with the scaling plan, you can only trade a certain amount of contracts depending on how much money you have in your account. Here is the scaling plan that they have for their accounts. Now, what is good is that it is a 1-to-1 micro to mini conversion. So 2 minis is equal to the 20 micros. So that's really, really good. I do like that. But as you can see, you get to trade more or higher size the more money that you have in your account, right? Until you can hit the max size that your account will allow. Now, this scaling plan only exists for the starter accounts. So if you're in a expert account, you don't have to worry about this scaling plan. And that's one of the benefits to being in the expert accounts, that they don't hold you to the scaling plan. They also don't allow high frequency scalping and algos. So I feel like this one should be kind of a given, at least for the algo one. For the high frequency trading, they count that as like 200 trades per day, which honestly, I couldn't even fathom taking 200 trades per day. Although I know people who do take 200 scalps per day, and it's pretty nuts. And, it's just one of those rules that My Funded Futures has, that, they don't want people who are basically only holding trades for like 5 to 10 seconds and getting out. To them, that's not trading, right? I mean, it is what it is. If you're a high frequency scalper, maybe you go over to Apex and, my funded futures isn't for you. But if you're not, then this would be your realm 1,000%. And then the last thing that they have is the same trading news. Their news trading is literally the same as Apex. So again, I would say just don't trade the news, right? They define it a lot better than Apex does, though. I will give them credit for that because they clearly state like FOMC, no trading, CPI, no trading. That I appreciate, right? So at least you can structure your trading around news events that you're not supposed to trade, right? All the other news events, they're a little bit more ambiguous with, but they do say that as long as you're trading your usual strategy that they see you trade all the time, then they are fine with trading the news. And then the other thing too is that they also have the right to like review your account. So if you pass or if you're trying to get a payout, they'll review your trades. And, if you've been trading the same way the entire time, then I really don't think you have anything to worry about it. And then I wanted to make a quick note here and say that I already said one of these, but the expert account, there are no scaling plan or consistency rules. So another benefit to that expert account is that this 40% consistency rule, you could just throw it in the trash. Don't even worry about it because it's not there. So with that, you could literally make like 15K in a day and be good. You don't have to worry about it. Then it's just like, okay, let me just kind of make it to payout, right? So that is one benefit of having the expert account compared to the starter. All right, and now we got to talk about the payout rules. Get into your bread. So on Apex, you need a minimum of 10 days traded to be able to request that payout. They also have request windows that you have to request within. So it's the 1st and the 5th for the first window, and then the 15th through the 20th for the second window that you got to request your payouts within. Now, they have talked about changing some of these things too. Like they talked about changing the consistency. They've talked about changing the minimum days. They've talked about changing the request windows. But for now, this is what they've got. So this is what, I'm going to tell you guys. But yeah, so there's 2 payout windows within the month, and you can request in either one or both if, you meet the minimum requirement days. So you can literally get paid out twice per month. Now, they do have capped payouts for the first 3 months. So for the first 3 months, you can only take out a certain amount of money, and you also have to hit a certain amount of money within the account to be able to withdraw your money in the first place. On their website, they tell you exactly how much your minimum balance needs to be able to actually request a payout. So these are all of the balances that you need to hit to be able to actually get to payout. And then on top of that, if I scroll down, and this box should work out perfectly here, this is the amount that you can actually withdraw per pay period, right? So if you're in a 50K account, pretty much you need to make 2,600 to be able to request the payout. And then out of that 2,600, you could take out $2,000, and that would leave you with only $600 left in the account. So the one good thing about Apex is that you don't really need to leave a safety net, because $600 really ain't a safety net. It's not a lot of money left over. Once you've taken your payout, that's all you would have left. Now, that's the maximum that you can take out, but you could take out less, right? So like if you were up to 2,600 and you wanted to only take, let's say, $1,500 out, you're well within your rights to only take $1,500 out. And then at that point, you're leaving yourself with over $1,000 left in the account. So, I mean, that's one way you could do it as well. And then, like I said, you don't need to leave a safety net. And then it's a 90-10 split, but you keep the first 25K. So the first 25K worth of payout is 100% yours. And then after that, then you get the 90-10 split. So that is something to look forward to. That is a ton of money that you get to keep. And then after that, you start splitting the profits with Apex. My funded futures is a little bit different for their payout rules. So every 14 days, you can request a payout. So it's not so much of a window as it is just every 14 days, you can request a payout. You don't need a minimum days traded. I believe it just starts when you start trading. You just got to wait 14 days and then you can get your payout. There is a buffer zone before you get to payout, right? And your buffer zone is your drawdown. So for example, if you take a 50K account, then you need to make 2K before you can take a payout, and everything above 2K then becomes yours, right? So unlike Apex, where you didn't need to leave that safety net, on my funded futures, you 1000% have a safety net, and that's your buffer zone. They have that there to basically protect you from blowing your account. You can take out money in the buffer zone, but it only really hurts you at the end of the day. It's better just to build that buffer zone and then start taking your profit only after you've made the buffer, right? Now, on the expert accounts, there's no cap to your payouts, which is also huge, right? So you still need to get to that buffer zone, but once you get to that buffer zone, you can take out everything. So if you're up 4K, you can take out 2K, and they're not going to bat an eye, right? There is a cap on the starter accounts, though. So that's the biggest difference between the payouts between the starter and the expert, is that you do get capped on how much money you can take out. But after 60 days, that cap goes away because you've basically shown them that you can be consistent. And on top of that, the same thing works with the buffer zone. So the buffer zone rule follows both of them. It's just that there's no cap on the payouts for expert compared to starter. They cap you for 60 days. And after that, you become uncapped. And then lastly, it's a 90-10 profit split on my funded futures as well. Really good profit split. I mean, I wouldn't go for anything less than the 90-10 at this point. And you get to keep 10K of your first profits. So my funded futures is a little bit less than Apex when it comes to the profit split, but still a good profit split nonetheless. Like, I'm not going to complain at getting 10K 100% compared to the 25K, especially when I kind of give the edge to my funded futures on getting payouts. It's a little bit easier, as well as they're also a bit faster on getting payouts as well. It takes them about 1 to 3 business days to get your payout. But Apex, the processing on payouts is a bit slower. They have said that they're working on their processing to make it faster, so we'll see what happens. But I also think that goes a little bit to the fact of the sheer amount of people that they have trading on Apex. It takes them a little bit longer to get through their payouts. But as long as you get approved for your payout, you know you're going to get it. So it's all good there. Even with all the controversy that's been surrounding Apex, they are still paying people out, right? I know a lot of people are going to comment on this video and say that Apex is a scam and blah, 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 blah. And look, they might not have handled their situation the best. I can admit that. But people are still getting paid out through Apex. People are still passing evaluations and getting funded. You just have to adjust to what the new rules are. When I start looking around the landscape of other prop firms, they're really not that much different, right? I think the only big difference was that Apex really wasn't enforcing the rules that they already had in place, right? And my funded futures isn't much different in terms of rules than Apex. So at the end of the day, you just got to make whatever is the best decision for yourself. If you want to trade my funded futures, then go for it. I think they're a great prop firm. They don't really cater to scalpers, but if you are more of a, day trader, or, you like to hold more than a minute, then my funded futures is going to be perfect for you. But if you're a scalper who is only looking for $200 and you want to get 20 accounts and, run up 20 accounts, then Apex is going to be the right fit for you. So at the end of the day, regardless of what your feelings are about these prop firms, you got to decide which prop firm is going to be most beneficial to your business and your trading. And that is 100% your decision and not what other people are saying online. I'm just here to give you the facts of what these prop firms are offering as far as rules, accounts, prices, and all that stuff, and a general feel for it. But you got to go and experience it and make the right decision for yourself. So I really hope that you guys found this video helpful. If you want a full review on Apex, even though some things have changed a little bit, I do have a full review breaking down most of what's current on the channel, and it's gonna be popping up now.